Shares of Vancouver-based Artemis Gold are moving higher after the company delivered record second quarter financial and operating results. To discuss what drove the performance and what's ahead for the company, we're joined now by Stephen Dean, founder and executive chair of Artemis Gold. It's great to have you join us. Thank you.
Hi, Lindsay. Good to see you.
So Artemis operates one primary mine in BC. That's the Blackwater Mine. I want to talk about that first. What is Artemis Gold doing to advance its next phase of growth as well?
Well, we're very busy on that front. We only commissioned and went to commercial production of our first phase operation last year. In the last 12 months, we've in fact commenced two expansions. One we call 1A, expansion 1A, and that's taking our processing capacity from 6 million tons to 8 million tons. And in December last year, we announced the commencement of our EP2, which is our big expansion. That's taking us all the way to 21 million tons. That's a 250% increase from our base production level right now. So we're pretty busy on the expansion front.
Yeah, and you've said the expanded phase 2 will position Blackwater as one of the lowest cost, highest margin gold operations globally and among the 3 largest gold mines in Canada. That's pretty significant. What gives you that confidence?
Well, that's always been in our plan. What's been the subject of analysis for the last year or two, and particularly in the context, as you mentioned in your introduction, we've got a higher gold price, which means that gold companies, including ours, are generating significant cash flows, higher cash flows than previous years. And that's allowed us to accelerate these expansions. This is a very, very large deposit, almost 12 million ounces in the ground. And we have significant scope to expand it, even in fact, beyond EP2, which is a study called Phase 3, which is under consideration right now. So it has a lot of potential.
Do you have any defensive moves, though, if the price, like you mentioned, the price of gold, obviously I mentioned it too, the price of gold is going up. If the price of gold goes back down again, do you have a plan in place?
Yeah, that's a good question. Well, we are comfortable in enjoying pretty high margins. In fact, an industry-leading margin of about 71% on revenue. It's been a volatile market, as we all know. Because we are spending significant capital in our two expansions, 1A and EP2, during the last 12 months, we've put in place what we call put options. In other words, it's the downside protection of delivering ounces at a fixed price, and that downside floor is 5,300 Canadian dollars per ounce. But it allows us the full upside if we, in fact, enjoy much higher spot prices as we are now. So that will underwrite our cash flow and ensure that we generate the capital that we need to generate to fund our two expansion programs. Our 1A is probably the most significant, and that's due to be commissioned in Q4 of this year, and that takes us to 8 million tons and a significant jump up in annualized production.
You've just announced, too, the company's inaugural dividend while also investing heavily in growth. So how are you balancing shareholder returns with funding the next phase of that expansion at Blackwater as well?
Well, it's a modest dividend to start. It's a 5-cent per quarter dividend. That's what we call our base dividend, and that increases to 8 cents under our policy. That the intention is to increase to 8 cents next year. And then in 2028, when we get to our year of commencement of full-scale production of EP2, we'll revert to what we call a variable dividend base, which will be approximately 40% of free cash flow after capital spend and operating costs. The margins help us to be confident enough at this fairly early stage. The company's only been around for about 4.5 years. It makes us comfortable to both make sure we have the funding for our expansions, but at the same time, it's important to give a nod and a thank you to our supportive shareholders who've been very faithful to us while we continue to build capital value.
I want to ask about what I feel would be quite a risk to the Blackwater Mine, because obviously it's in BC. We know that the BC wildfire season is incredibly active right now. The access road power line's currently unaffected, but this has been a reoccurring operational risk. Is that right, with people having to be evacuated in the past in that area? So what contingency plans are in place if fire activity escalates, and how many days of operational buffer does the site carry if there is any delays?
Well, we don't budget for wildfires, but we're very aware of them. The first 2 years of construction, we had wildfires very close to the mine, and that was challenging. I guess in certain ways that's become a plus or a small advantage in that much of the forest around us has already experienced and been burned. So the risk of wildfire with immediate danger to the site and our people, more importantly, is low. And we also have significant buffers of fire breaks around both the power line, as you mentioned, as well as the operating mine site. In fact, a couple of years ago, we did have a fire that ran and jumped the fire break on our power line, and there are some protections on that power line with the anti-flame retardant on the poles and what have you, which proved out to be very effective because in that instance there was no damage, even though the fire went straight across the access and power line route.
Just very quickly before we wrap up here, then, what is the biggest risk, do you think, or the biggest headwind? Would it be gold prices falling again then?
No, I think we've got a good margin that will make us comfortable on that front. And as I said, we've got put option protection to cover off on that risk. Lindsay, the gold mining business, the mining business generally, is always full of risk. We are a particularly risk-focused company. That's part of our philosophy and DNA. We've got a lot going on, so it's all about the execution of those two expansions and its integration with our operating mine without interfering with our ongoing production. So, I think that's probably the biggest risk for us, and in fact for any mining company in our sort of phase, is it's all about the execution.
Got it. Okay, we got to leave it there. We're out of time. Stephen Dean, founder and executive chair of Artemis Gold. Appreciate your time today. Thanks for joining us.